What is up, everyone? Been a couple of months since I last hopped on one of these. Been too long, but I figured Friday, August 16th, just as good a day as any to kind of come on, go through some charts, and just show you guys what I've been looking at, seeing in the market. Also wanted to kind of just go back over, some of the predictions I had made in my last video and how those ended up shaking out. A lot of it went kind of as expected. I'm not saying I have some type of guru power or anything like that, but it was nice to see that the market just definitely cooperated with the trading plan. Definitely made some money, lost some money along the way, and kind of just wanted to give my outlook for the rest of the quarter/year. So we'll go over to some of the charts, and from there, really just kind of walk through our normal checklist. So let me get the music started here, and we'll go ahead and go full screen on the charts. As you can see here, we got Microsoft pulled up first, but I'd like to just go over SPY. Market just closed a few minutes ago, so we're going to have obviously the most up-to-date of our charts to look at, which is nice. So starting with the SPY here, kind of went crazy on the drawing of the trend lines. So let me go back to an earlier drawing, some different levels that I was looking at. Here. All right. Sorry about that. Probably should have had that done beforehand. But as you can see, and you probably know, we've had a huge retracement happen since the last time we spoke, right? Last time we spoke, it was Juneteenth. Market was closed. I had talked about the market potentially pulling back a little bit, heading higher. Did not see all of this coming down the pike as I should have most likely, but that's okay. I mean, in a way, we did see it, right? This time of year, Q3 is typically the most challenging for stocks across the board. Whether it's an election year, not election year, doesn't matter. This is the time of year where things pull back. Many consider it the beginning of the year, right? Positions get closed out, other positions get rolled that are going to be, the catalyst for the following year. For any people that are trying to time the market, it's a great time, right? Wait for the market to pull back like crazy, and you'll be able to load up on some longs, which is what I did as well. So we'll talk about that in a second. But overall, kind of just wanted to see, are we really done with the pullback or not? So I really like using Fibonacci extensions. You may or may not have known this, but drawdowns tend to be very similar. It's often said that history does not repeat itself, but it often rhymes. And we can see, obviously this was a very, very large pullback when you consider, the previous one, right? This had hit beyond the 100% that our last pullback in April was. It was about twice the size. But using these Fibonacci extensions, we can see that this level, this 161 level, seemed to have held up. It's not perfect, right? None of these levels are going to be perfect to the penny pullbacks. And you can see here, we did dip below that a little bit on that crazy Monday where things sold off over the weekend. But we've rebounded pretty nicely. And so you can use that as kind of, hey, how bad is this going to get when you're having these major pullbacks? And it's only going to be so reliable. I wouldn't, as with anything, technical analysis is really just a guideline for your overall, trading. And so same thing here, right? We came up to that 168 level that we were talking about before. We were kind of dancing around it and then shot up, didn't quite make it all the way up to the 261 before, retracing down and kind of consolidating around that level. So it's not perfect, right? People use this as kind of like a guideline for other trades that they'd like to make. You could also do a Fibonacci extension this way and see if that is more, similar to how this went. We had a big run up from April all the way through July. We pulled back to that 78 level and went. So you can see, like, no matter, I just drew these Fibonacci's 3 separate ways, But at the same time, they all kind of told a similar story, not an exact story of where the market dip would go. And pretty much the market has played exactly to that. So now we're at a position where, you know, for the remainder of the quarter is yet to be seen really what we end up doing, right? So like we're above this 23% retracement level now, right? We came into this golden pocket zone where I hope you loaded up a lot of longs when people were panicking and wondering about selling. I myself got a text message, hey, should I, you know, reallocate my portfolio or should I change anything with how this market has been? And the answer was no. The answer was no, right? I just basically said, hey, you should continue to add to your positions, think of everything as on sale, and continue going. And look, the market's basically recovered and gotten right back on the winning streak horse. So, you know, if for anybody that was panicking when this sell-off happened, we have a correction, you know, like this almost every year, right? If we go right back to last year, it's the exact same time of year, we had a very similar sell-off. And if we go and use our Fibonacci extension tool, this might have been a better pullback to compare it to, right? You know, going to that 409 level, coming back over here. All right, let me delete this one out. And almost to the penny, we had the exact same pullback that we had last September. Let me zoom in here for you a little bit so you can see this better. But looking at this pullback that we had, look, last year, Q3, it happened a little bit later in the year, of course, but it did happen where we had a major pullback. It sure as hell lasted a lot longer than this one did. This one was a much more aggressive dip, but look, to the level, right? Punctured that 100 level, but really didn't get much deeper than this and kept going. We had the exact same correction that we had last year. So it stands to reason if we had the same correction as last year, then the same follow through is bound to happen. And one other thing to note, we did break that 400, came up a bit, 450, retraced to 400 and went. This year, we broke 500, made it a little bit further, 565, but came back down essentially to 500 and went. So is the market done pulling back? I don't want to say yes or no 100%, but I feel very confident loading up long-term plays in this area of the year, knowing that history often rhymes if it doesn't repeat itself. So looking at SPY in the short term, you know, you could be looking at some 565 calls for the end of the year. Like I wouldn't be mad at that. Just looking at, you know, like a January 2025 SPY call. Oh God, this option's changed. It's crazy. Looking at a January 2025 SPY call, right? 565. I wouldn't be mad at $2,000 on this, right? With a lot of upside. And there's some tools where you can see, hey, if the market does X, Y, Z, you know, we could go into all-time highs. Now we do have a little bit of the rest of the quarter to make it through before we could for sure say, all right, you know, this is going to be how the rest of the quarter goes. But as of right now, I feel pretty confident looking at these charts that the worst is behind us and now we can proceed. You know, if we don't reclaim this high and we form, you know, a secondary high, that's where, you know, proponents of like Elliott wave theory might tell you like, hey, this was our 1, this was our 2, and then now we need a 3 before we start climbing back up, right? And that's kind of what happened here. We had a 1, a 2, a 3, and then started climbing back up. So a lot of these technical principles are at play now, but who's to say which one is exactly right? So if you are doing a buy and hold strategy, please continue to do so. Dollar cost average, please continue to do so. If you were looking to enter leaps, last week might have been your chance. I'm not going to say that the chance is completely out there. There's definitely a lot of plays left that you can still make. But you know, that being ready at that particular juncture was great. And you could probably argue that maybe I should have hopped on last week and made a video before all the gains of this week were to happen. But even I wasn't really sure if we were done dipping. I mean, there's definitely a scenario where we dip down to 489. before coming back. But it's kind of funny when you use these different tools that are at our disposal that aren't indicators, that aren't lagging indicators, that are forward looking to kind of gauge where the market is and where it's going to go. So now I just want to kind of run through some of the bigger tech names and, see how this also is reflected in that. So Apple's been a little bit of a different beast in that it hasn't had the greatest bounce back after that big dip, right? We talked about this in June. We're nearing that 168 level. We could reject and come down, which we did. Let me make the chart here bigger for you. You don't need to see that much of my face. So we were looking at that 168 level, right? Towards June, right? June 19th. Looks like we rejected. We did get a pullback. We didn't come quite test this trend line 100%. Traced down, kind of had that 210 level, 207 level, came back up, broke through, and then failed to retest. You could even argue that we're making a head and shoulders here, right? If we come back down, which would be worrisome for Apple, right? Apple's been in the news for the wrong reasons lately, like antitrust, lack of innovation. People are hyping up the iPhone 16, but the AI news that it came out with was kind of flat, even though it did pump up the stock a little bit. We did have a major retracement in that sell-off. It's rebounded since, but still a ways to go before we get to all-time highs. I'd be interested to see if this head and shoulders does form, because I'd be a bit worried if head and shoulders does form, because then we could really go from 237 to 200 down another 37. We could see like 163. We could test these levels down here before rebounding, which would be spooky for Apple Holdings, right? And you did have the news of Warren Buffett selling off, blah, 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 like all those things. Anybody that would be tracking Buffett's investments as their own index would understandably be encouraged to sell off. So obviously, Apple is really big in everybody's life. I'm not saying it's going anywhere by any means. It's for sure going to be a part of everybody's life moving forward. Pretty much everyone under the sun has an iPhone. And I don't think Google or Samsung or any of the other companies that are making cell phones are really going to displace Apple anytime soon. They do need innovation as always, but they will be a very profitable, very robust company for a long time. So they may not have the growth of some of these other companies at its disposal. And one of those would be Microsoft, which, as we can see, Microsoft had its correction last year, going from 340, 10% correction down to 310. Had a great run over the course of the year. I got way too many lines here. Let me move all these for you. Had a great run over the course of the year, and very, very similar kind of pullback scenario here. Now, Microsoft had much more of a dip. This was, nearly a 20%. This was a true blue correction. And it hasn't rebounded as much as, let's say, the general market or Apple has done. General market is supplanted by a lot of, obviously small and mid caps, like lifting up and preventing. It seems like mega cap tech stocks kind of got hit the hardest, and that's kind of all we've been going over so far. But Microsoft, as opposed to Apple, has the partnership with OpenAI. It has the enterprise value. It's embedded in so much more, and seems to be robust. Also seems to be on the cusp of innovating a ton of things. They have, gaming via Xbox. Like, Microsoft is a very, very strong company. It's kind of like the silent leader in the US in terms of tech companies. It's not the darling that Nvidia is, like the new kid on the block, and it's not the the sleek, sexy that Apple is, but Microsoft is kind of the glue that holds everybody together. So if we use our extension tool again, make sure I have the right one here, we can kind of see how this correction played out from the 309, right? We had a much, much larger correction than we got last year in Microsoft. It pretty much doubled its its previous two corrections. I'd be interested to see on the weekly, This was 2022. We're not going to get a crazy correction like that, but the value of Microsoft was nearly cut in half during 2022 and has since rebounded. But on a larger scale, if you look at the weekly, this Fibonacci extension tool is still useful in terms of mapping out some potential levels for it to pivot. But if you got, if you were hoping this was the end, there was a small bounce here. If we zoom in a bit here, we can see this better. There's a small bounce here, but then it obviously continued the downtrend and was pretty extreme correction. I loaded up on longs underneath 400. I thought it was a great buying opportunity. I'm super excited to hold those. Obviously, that position is up already in terms of my normal just buy and hold portfolio. But Microsoft, I think, will have a better rebound story, just how involved in the AI world that they are as those, projects all start to come to fruition in terms of generating revenue, right? There was a bunch of money spent with NVIDIA on chips to kind of build the programs. Now there's going to be a period of time before the AI component really starts to generate a bunch of revenues for different companies. And some companies are going to fall way flat. They're going to try and build AI and it's not going to go well. And I'm hoping that Microsoft isn't one of those companies. They have, obviously, I would imagine, the best engineers, the best resources, cash flow, like they have everything in their sales to kind of move them in the right direction for AI to be able to capitalize on that. So I would look for Microsoft to continue being the mega stalwart that it is. Now moving on to the darling of the market, we have NVIDIA, who has had a very deep correction, deepest, I guess, of any of the companies that we've talked so far. Going from 140 all the way down to 90 is a huge correction. It's like a 30-something% correction. Hopefully people were able to load up here. We had a little bit of a double top, which was an indicator that, things were going to turn, and then a huge plunge, but things have rebounded very well. And that's drug up a lot of tech with it. So we'll continue to see how NVIDIA does in the market and how it drags up the rest. I don't think the AI story is generally done. I think a lot of people are waiting with bated breath on the earnings of NVIDIA on the 28th. I think there's two schools of thought on this. The first school of thought being that, NVIDIA is going to blow earnings out of water. They're going to have great future guidance. And they are going to basically clear all-time highs and continue moving upward. That's one camp. The other camp would be that they may do very well on earnings, but they are not going to provide good guidance. There's been news that one of their new chips new products that they were going to roll out has had some delays. They pulled forward so much of their earnings potential, and you just basically pulled forward the growth in these last 2 years, like double digit doubling of the stock price. It's hard to just continue that performance forever. So it would be unheard of if NVIDIA does that. Now, I'm not saying that it's going to fall, to like $40 a share and you're foolish for owning it. I myself started a position around $115 because I had FOMO as well. But we could be in this little box. Some traders call this the golden box for retracements, where we could, spend the next week and a half kind of grinding up here at 130, maybe break through, but then come crashing down for a continuation of the move. That would not be surprising if that were to happen, right? But I think as we get closer to earnings, $130 is going to be the share price. The run up to earnings, right? You're going to have a bunch of retail investors piling in. Oh, NVIDIA's earnings are going to be great, like blah, 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 blah. Then come like the 27th, very high. August 28th comes, boom, whatever happens on that conference call. And then we tank tank the stock price or fly up to new highs, right? Like I do like looking at both scenarios. I'm skewing bullish. I think obviously the year has been very bullish, despite of what's happened geopolitically. Like we're in a great position. And overall, like the economy's doing well, unemployment's doing well, rate cuts are on the horizon. I just think that given the time of year we're in, and basically how great Nvidia has to be in order to meet everybody's expectations, plus a part of me feels like if everybody knows something's going to happen, then that's not going to happen, right? Like everybody knows Nvidia is going to blow out earnings. Everybody knows that Nvidia is the darling of the stock market right now. So, that's where the thought process comes in of wanting to be contrarian and not necessarily be like a perma bear, Debbie Downer, anything like that, but really just say, all right, can this story that's already been so great get better and cause like a bunch of investors to pile in, or are we pretty much just going to coast as expected? And, for that reason, some investors will lose some of the shine of the stock. Like, I think the latter is probably more likely, but TBD, right? TBD. But I wouldn't be surprised if we get to this 130 level and then retrace lower down. I'm not saying we're gonna break these these lows, but it's possible. It's possible. Anything's possible in this market. Let's get out of tech really quick. Let's go look at Lilly. See what Lilly's been doing. It's so funny, dude. Just like trading sideways, right? We talked about this in June. How I thought it was going to push through 900 and then retrace a little bit. It pushed all the way nearly up to 1,000 before just absolutely falling off a cliff. Had a few down weeks, but Lilly just will not be slain. It is only, 3% off its all-time highs, maybe even less off its all-time highs. Before as it continues to push, it's just a beast. Lilly's a beast. Like it would have been great to load up more longs or some leaps down here, but you missed it, right? I missed it. Everybody missed it. My normal, DCA strategy helped me get in a little bit, but overall, right, this would have been great timing to wait for. And it's funny because we basically, for Lilly, they gave back, I'm not going to say most because we have this huge run up just in January, but if you were able to get in for these prices here, and I just realized I'm showing the charts, if you were able to get in for these prices here, you're basically the equivalent of investing in February, right? And just to kind of reiterate, in June, we were talking about, hey, it's going to break through that 900, come back down to retest. Like we saw some of that. And then it pushed all the way up to nearly 1,000 and fell off the cliff. And then continued on this run, right? We're almost back at all-time highs for Lilly. I wouldn't be surprised, by their next earnings date if we've made new all-time highs. I remember last year, I had a really good trade in Lilly. We can kind of see how last year went. And I'm not saying it's going to be exactly the same, but last year we had a big dip, right? Basically brought it all back. By mid-October, we were making new all-time highs. And then we had a secondary dip to kind of close out the year before starting the year very strong. So if history does rhyme, we might see that same very thing happen this year with Lilly, right? We have a singular dip, push up to all new highs by mid-October, maybe mid-September this time, right? Because everything seems to be shifted about a month back. And then, we retrace again and kind of go flat into the new year. If it's really cyclical like that, I would be absolutely elated because then when January rolls around, put some more money into the market and take advantage of that through a leap. Just want to look at a couple of more here. I know I'm kind of going long. Let's go look at Uber. Uber had a crazy run up, right? And then I remember I talked in June about how I missed my opportunity to go long if it came under 60, right? I was like, if it goes under 60, I'm going to go long. It happened. I didn't go long. but it did give me another chance here to go long. It's funny, like we haven't seen really any gains since April pullback. Uber never really recovered the same way that the tech stocks did. Obviously, 100% gain from November through March of last year is going to be hard to repeat. But if it can, push from these 58 levels back up to new all-time highs, I would be elated. If we are going to get one more pullback, to this 67 level, I would love to load this up here and go. But I don't really like how it's been trading sideways. I think one thing holding it back is it's, does have that 1 quarter of non-profitability back in May that kind of tanked things. Came back to profitability when it announced earnings last week. But at the same time, I think the market's just kind of spooked. Nobody's really convinced on the Uber play until they string together multiple profitable quarters in a row and continue to push that earnings number up. So any other ones I want to talk about? Got my baby Burke. Chipotle. Haven't talked about Chipotle, I don't think, on one of these before, just because of the pre-stock split price was pretty high. It had a great run, didn't have too much of a pullback last October, but has, this is basically the split date, right? It's almost exactly to the split date, just absolutely, lost a ton of value here, going from $70 a share down to 50. 2/7 is like 32% dip, almost kept dipping, almost a 40% dip overall. And they recently just lost their CEO. Chipotle could be not one of those great ones. Now, the good news is that Chipotle is in a position where they don't need to change much to maintain that like dominant spot that they have, right? So that's a good thing. So the CEO, whatever next CEO that they bring in, has to basically do the Steve Jobs to Tim Cook transition, right? And what I mean by that is Steve Jobs was the visionary. He came in, gave us all the Apple products, kind of built the brand of Apple. Tim Cook came in, tweaked things, made it really operationally sound, and that way the margins could be improved and Apple continued to go. And there was no need for innovation, right? Chipotle may have had their Tim Cook CEO, who had just left, who went to Starbucks, Nichols, right? Not Rich Nichols, that's somebody else, but the CEO that just went to Starbucks this week, right? So Chipotle having lost that is not great for the brand. But at the same time, he is leaving them in a position that is sound, right? They're sourcing their vegetables locally. They don't need to change that. Minimum wage trends might hinder some of the growth. But overall, the brand is really strong. You have some competitors coming up, like the Cavas of the world, that could be kind of eating their lunch, no pun intended, a bit, and something to worry about. But overall, I think Chipotle is in a very strong financial position and pole position to kind of maintain things. Like the only thing that would really take it out is if the growth of Cava is just insurmountable. But the beautiful thing about restaurants is that, I was just reading Beating the Street by Peter Lynch, and he said that, a restaurant in New York doesn't really have an impact on a restaurant in California the way that a tech company can come in and just make your same computer chip for cheaper, faster, whatever. So because Chipotle has so much ground covered already, it will take a while for Cava to catch up, in the sense that, yes, they can have very successful, very delicious, very similar bowls, provide free guac, whatever. But Qdoba has done that for a really long time, and Qdoba has just barely touched the West Coast. Cava, I personally haven't seen a Cava anywhere in my travels. I live very close to LA. I've been to Sacramento. I've been to a few cities. I've never actually seen a Cava with my eyes. There's probably one in LA if I had to imagine. I just haven't tried to find it. But my point is that even if Cava has a better product than Chipotle has so much of a head start that it's going to continue to be the leader, depending on what this next CEO does. So always want to keep your eye on management, and definitely do that from there. So We're already at the 30-minute mark. I don't want to go too much longer because I don't think that your attention span is going to last much longer. So I also don't want to talk much more. 30 minutes straight. It's kind of like my limit. So what I want to do here is I want to put a pin in the conversation in the charts. I think in a few days, I'll come back. I'll do another episode and kind of go into maybe some non-mega cap companies, more Chipotle's, things of that, kind of show you. We could talk about some upcoming things in the market. We have Jackson Hole coming up next week, how that might impact geopolitical, blah, blah, blah. But just wanted to kind of give you an update because it had been about 2 months since we last spoke. But hopefully you guys are making money in this market. I know it's a down market. I know, for your all-time highs, if you're tracking your account balances and your buy and hold, things look pretty bleak. If you're doing leaps and your leaps took a huge hit, I'm right there with you. No worries. The down markets, this is a great time to be investing and putting money in. If going back to the old Big Short quote, like you want fire insurance on a house that's on fire, right? And that's kind of what you're doing right now by putting more money in the market today. You're setting yourself up to really capitalize on gains. If you're a dollar cost averager, just keep dollar cost averaging. If you have additional money sitting on the sidelines that you might want to put in, it could be put into, some of these companies that are still down a good ways, like Apple, who we just went over, Uber, who we just went over, Chipotle, right? I don't think that you would be upset 12 months from now having put a little bit of extra money into these accounts. But if you're a dollar cost averager, please just continue to do that. That's going to be the best way for you to generate wealth for the future. So I'm Benny's dad. I'll talk to you guys in a few.